thank you all for coming. It's lovely to see you. So many of you here. Here, this is a sold-out event, so I'm glad that you were able to get a seat. We're going to present this report, which is very important. It's the first time a report has been done on the $1 million plus paintings market. And I think it's important to know about this because it represents 74% of the share of art sales. So this is a big bulk of the sales. I'm extremely happy to have our panelists here, and I'm going to start by presenting them. To my left immediately, we have David Schrader, who is Global Head of Private Sales at Sothebys. To his left is Brooke Lampley, who's Chairman and Worldwide Head of Sales for Global Fine Art, also at Sothebys, obviously. And finally, not entirely finally, but finally from the Sothebys people, is Damian Leslie, who is Senior Director and Senior Loan Portfolio Manager at Sothebys Financial Services. Last but not least, we have the author and the co-author of the report, who's Anders Petterson, who is CEO and founder of ArtTactic, and he's going to give us the key findings of this report.
Georgina, thanks for the introduction. First of all, there's a number of people involved in this report I just want to thank. First of all, I want to thank Anthony for coming to us, I think it was August last year, with this idea of should we look at the 1 million plus market. And thanks to Sothebys for hosting this event and for partnering on this particular research project, which hopefully will be one or many. And today, what I want to do is to give sort of a broad, I guess, sort of a slightly macro view of the 1 million plus market. But I also need to thank my team, Lindsay and Sandy, who's been working tirelessly on this project. Unfortunately, I destroyed her Christmas holiday, and we'll pay back for that, I promise you. I also want to thank Culture Shock Media for an amazing job with the actual design, the production, and the editorial of this report, and it's been an amazing collaboration all in all. So there's three pillars to this, at least three pillars to this report, so it's not only us. I guess you might ask why this 1 million plus, why is this interesting? For us, it's actually represents an intersection between a field that we have been working on for the good part of 20 years. I came from a financial background and I went into the art world with a sort of half my leg into finance and half my leg into art. And it's this the segment of the intersection between art and finance. And I think obviously this is a pretty relevant topic to that particular thing, and we have obviously people on this panel who knows much more about that business than I do. But for us as the researchers, it was really interesting to start to take a very, it might sound narrow, but it's a very narrow lens on a particular interesting market for the purpose of thinking about art as an asset class. So hopefully today's findings will give you sort of a bit of a sense of scratching a little bit the surface of what actually is, what are the trends we've seen. Now, I think it's important that we understand the context. So the report is looking over a 5-year period from 2018 to 2022, obviously a period of extremes. We had the Brexit, we've had the global pandemic, we've had war in Ukraine, we have currently a financial or an economic uncertainty which rising inflation, high interest rates, and so forth, which has been sort of defined as the perma crisis, which David Bellingham here at the front has defined in his introduction to the report. So I think it's bearing in mind when we look at this data, we also this is not a normal period. This was periods of extremes, and I think we need to look at data in that perspective, because I think hopefully the findings will show that there's a certain amount of resilience, there's a certain amount of action that's still taking place regardless of what's happening in the world, which I think goes back to why we think this particular report and this particular segment of the market is important. Just in terms of methodology, I'm not going to go greatly into it, but this report looks, again, quite narrowly at the 3 top auction houses. Can I mention them? Yeah. Okay, good. I never know. It's so basically Sothebys, Christie's, and Phillips are included in this report, and obviously they represent, for the fine art market, which this report looks at, I can't say all, but a very large share of the 1 million plus market. I think what's interesting about, you might ask, why can't you just do this yourself? I think this report has added another dimension to it, which is something that we couldn't do by ourselves, and that is actually getting access to certain type of data that we otherwise wouldn't be able to share with you, and that's private sales data and bidding information. And it's actually extremely valuable, and hopefully some of the slides will show you that sometimes the public data that we work with, I would say 90% of the time, doesn't always tell exactly the kind of what the state of the market is. The second thing regarding bidding or bidder information is that it helps us to also understand demographic changes and so forth. So hopefully our findings, I say our because I said there's many people involved in this, hopefully will shed some light on these new developments and hopefully sets a precedence for future reports, and I think there's plenty of opportunities to dive much deeper into this, look at specific segments, artists, movements, and so forth. So for this today, it will be relatively broad brush, but hopefully we can explore this in more detail in the panel discussion. Right, so 5 key themes from my perspective has emerged. One is just the sheer size, and Georgina has already quoted the figure that the 1 million plus market for fine art accounts for 74% of the total. And that only 4% of the lots. I think it's important to, you might sort of say, you know, so if it's only 4% of the lot, what does it really matter? I think first, obviously, from a revenue generation point of view, it's incredibly important, but it's also a kind of a bellwether type of market. It sets a kind of a precedence for what's going to happen, and I think it trickles down to the lower end of the lower segments. It instills confidence. And as I said earlier, it also straddles into this area of the more economic aspects of art. So in terms of the size itself, as you can see, they're basically 31.3 billion out of 42 billion was what was generated during this 5-year period, which is a very large number, but again, shows the significance of this particular market. If we split this into the kind of segments, smaller segments, as you can see, the 1 million to 5 million represents by far the largest share of artworks, followed by the 5 to 20 million. It's interesting to, if you look at volume, basically, so 78% of the works are being generated by the 1 to 5 million, which makes it important. Obviously, in terms of actually value, it accounts for about a third. So each segment from 1 to 5 is about a third. So each of these markets accounts for about a third. But obviously, the 1 to 5 million is really one of the key markets. The other thing I mentioned was resilience. And I think this is an important part because there is an increasing, as we talked about, this sort of backdrop of inflation and the rising interest rates, etc. We're looking for places of store of value and diversification. And I think one of the interesting things here is that, first of all, you could see the top graph showing the public market for 1 million plus art, which maybe not unsurprisingly follows a kind of a dip during the pandemic itself, but a very strong post-recovery. I think I mentioned it regarding private sales data, and I think this is an important element which we normally don't have in our analysis, is that if you look actually at the private sales, the best year was 2020. This is not for the 3 auction houses, this is only for Sothebys, but I think we can assume that at least the trend might be similar. I don't think that's too far-fetched. But if we overlay those 2 graphs, you would see that actually the pandemic, the depth of the kind of the dip in the pandemic was probably not as deep as we thought. It might not even be a dip at all, it might actually be kind of stable. And I think the combination of these 2 data points, the private and the public, I think shows that this is a market that has shown incredible resilience during this extreme period that we are talking about. Changing in taste. Now, I'm going to just talk to you some of the kind of quick findings regarding how the market has kind of evolved. As we see, there's been a strong sales and particularly a strong rebound from the 2020 pandemic across virtually all categories. If we break this down into, one of the kind of the key drivers behind this is, particularly in the last 2 years, it's been single owner collections, and maybe there's something we can come back to later on that is coming to the market, which is linked to another thing I'm going to talk about later on, and that's the change in demographics and this generational shift that we're currently seeing on the supply side as well as the demand side. and it's probably going to be one of the key elements fueling this market in the future. If we look at contemporary art as one of the subsegments, so it's basically 4 segments in the report. It is Old Masters, Impressionist and Modern, Contemporary, and there's a sort of a in focus section looking at Chinese works of art and traditional paintings. But for the 3 main ones, contemporary art has basically, first of all, seen a significant increase but in the post-pandemic period. If we compare it to 2018, the market is about 24.1% higher. But I think, again, if we look at the phase we're currently in, has sort of settled at a much higher level than it was pre-pandemic. And again, we have to look at this with a backdrop of the economic situation we're currently facing. So the market is strong, and obviously we're still standing just in front of a big sales season coming up, and we'll see what that season will bring. But at least based on the previous data, we could see how this market has been up to now. It's interesting to look at the different segments. We can see that, for example, the young contemporary market has done particularly well in the last 2 years, where we're suddenly starting to see the young generation of artists coming into the 1 million segment, which I think if we went back 10 years ago, we probably wouldn't see that many 1 million lots by young artists. So there's also it's not only about established post-war and contemporary, but also young artists are now entering into this particular market, which may be something that can be discussed later on in the panel. The post-war market has been strong, again, fueled by several artists, but one of them is being the Warhol market that's been particularly strong in the last couple of years. And I think, this drives us into other things, which I think is interesting about this report, is that by not only looking at the genres, but looking at in this case, gender, looking at, it's not parity yet, but I think the fact that we're starting to see more women artists selling artworks in the 1 million plus is definitely encouraging. We've seen the share of this growing from 8.2% in 2018 to about 13.9% in 2022. So it's going the right direction. Sales has more than doubled from about 222 million to about 462 million during this period. So there is also, this is not something that we only see in the 1 million plus market, but we see that across the market that there is gradual more presence and representation of women artists in the art market, which is a positive sign. But it's also good to see that this is not only happening at the maybe lower to mid segment, but also at the top end, which, as I mentioned earlier, I think acts as a bellwether and sets the precedence for what's going to trickle down into other markets. One of the we looked at the report, several sort of smaller aspects of the market, and sort of pulled out interesting findings. I think, Anthony, probably in the future we can talk about other things that we can delve into. I think there's a lot of interesting smaller component of this report. I see this as a starting point to look at this 1 million market from a kind of more macro perspective, and then delve into this in the future as we go forward. But the return of serialism has been an interesting development, and I'm sure there's the panel has a lot to say about why that might be the case. But obviously there has been a lot of things happening both in the museum sector in terms of the publications, and obviously there are the sales has been increased significantly, particularly in the last year, where the volumes has basically gone from about 200 million in 2021 to about 341 million in 2022. So there is, in this million plus segment, there is obviously hundreds of sub-segments we could look at and go into more detail, and as I said, we'll probably do that for future reports. Now, the other thing which I think is important to understand, and this is bringing us into the kind of, I would say again, private data, because we're now looking at bidding information on the basis of what Sothebys has provided to us. I think the interesting thing here is that, yes, Europe and US still accounts for the majority of bidders, but Asian bidders are now accounting for about 32% of bidders in the 1 million plus segment. Now, it's important to note that actually probably predominantly these bidders are coming within the Chinese art segment, but they're also now straddling into the both contemporary as well as Impressionist and modern. And their growth rate, particularly since the pre-pandemic to now, has been significant in both sectors. So now, I guess these are kind of, you often hear that Asian buyers are involved in these markets, but I think that this is something that's now happening on a bigger scale. And this geographical shift, I think it's important that we are moving from a sort of European, US-centric to now a global collector base. That's going to also drive and fuel this market going forward. The last bit is generational shift. And I think this is an important part of the market right now. We're standing at the beginning of a massive wealth transfer that's going to take place over the next 20 to 30 years, where the post-war generation and the baby boomer generation will start to pass their wealth to the younger generations. It's already being seen in the art market through the single owner collections that has been dominating or has been a driving force, particularly in the 1 million plus market of the last 2 years. And it probably will continue. And then maybe that's a question again for the panel. But the other thing which I think is important, one thing is the supply side, but the other thing is the buy side. And what we are starting to see is that there is a decline in terms of the share of buyers now represented by baby boomers and the post-war generation, but it's compensated by an increase by the Generation X, by millennials in particular, which I think there's always this talk in the art market about cultivating the next generation, getting the next generation involved in the market. And here we're talking not the lower end of the market, we're talking the 1 million plus market, which has grown basically from 7% to 16% in 2022. So the millennials are becoming becoming a bigger force in this 1 million plus market than they've been in the past over this, and this is a relatively short period. It's over 5 years. It's also interesting to see that the Gen Z, which is even younger, even if they account for a very small percentage, a similar kind of development is taking place, which I think sort of overall suggests that the market is transitioning to a kind of a younger generation, even at the very, very top end of the market, which is interesting. And I think that's obviously bodes well for the 1 million plus market going forward. So in conclusion, just to kind of, I guess you asked maybe why, and I said earlier on why we're doing this. I think it provides transparency and insight into a market that firmly kind of straddles this historic, cultural, aesthetic value with the kind of financial value. It plays into things like what we're going to talk about, the panel services that's being built around the art world, the work that we've been doing with Deloitte now for almost 13, 14 years, which is the intersection between art and finance. And I think this market makes, this is obviously an important part of it. And I know most of these services are built around this 1 million plus market. To be able to understand, as I said also, to understand consumer behavior going forward could be extremely important. And then we hope that we can work with Sothebys going forward to be able to tap into this data to share how generations and how both buyers are changing geographically as well as by age groups. And finally, I think the whole thing about art is now, I think, firmly a viable asset class. And then when I say asset class, people say it's not necessarily the same as saying is art a good investment. I think asset class for me is something that people can trust, something I think the word of store of value is more important than necessarily making money out of art. But the fact that we're starting to see financial services being built around art, we're seeing more and more private banks, family offices approaching us for research, and I'm sure also in your world, starting to see the connection between the finance world and the art world, particularly at this level we're talking about here. I think it's a sign that there is an increasing important economic aspect of art that we shouldn't neglect. That is not to say we should, obviously, at the core of this is the cultural and historic and all the other values, but in addition, we're now also talking about a very strong financial component I think we should focus on. So I think I encourage you, please pick up the report when you get it and read it, and hopefully join us on this journey into the 1 million plus market as we go into the future. And with that, I would like to pass to the final slide, which is this, and then I will pass back to Georgina.
Thank you very much. Thank you so much. So I think we're going to start with Brooke. We talked a little bit before this panel, and I just would be interested to hear from you. You talked to me about a real shift in the way people collect. And particularly, obviously, we're always talking about the $1 million plus. So can you tell me a little bit about the changes in collecting habits?
Well, I was thinking about that as I was hearing you talk about how the audience is getting younger and also more diverse. And I think part of that's fueled by the fact that, in my experience, people are collecting much more broadly from an early age or stage in their collecting now than they were previously, say, a decade or 2 decades ago, when it was much more common to pursue a thematic collection, one defined by a group of artists or a particular movement, or even a very specific style. Increasingly, I interact with collectors at various stages of their collecting journey who are seeking out the best examples by a real array, diversity of artists, and people who are moving from a thematic collection into a broader collection. So maybe they used to collect the best contemporary art, but now the best contemporary art embraces the very best Frida Kahlo and the very best René Magritte and the very best Take That or Claude Monet. So and with that, I think you see a lot more people coming into the $1 million plus market sooner in their collecting, because they're seeking apex examples by artists as opposed to seeking simply representative examples by artists. I think a lot of collections used to be formed around things that were emblematic, and now people are very focused on the best that they can have.
I think that's a really good point, not to interrupt. No, I think what you've seen also is A examples are now trading at a much bigger premium than B, C, and D examples, which we've seen, you know, the spread between A, Bs, and Cs and Ds massive, where an A example of a Magritte could be worth 150% of value, where a B could be 75%, a C could be 50, and a D could be almost unsaleable. And that's really a trend that we've seen, and to your point, led people to really go from, you know, contemporary works like Ed Ruscha into works like Picabia, and sort of genres and silos shift.
I completely agree, and we were having this conversation. It has become perhaps problematic from a pricing perspective, because I think historically there's an expectation, to take the same example again, that when a Magritte sets a world record price, that all Magrittes are revalued. And increasingly we're finding a disconnect between the market for A examples and everything else. So just because a great Magritte sells, or a phenomenal Magritte, a perfect Magritte sells for an extraordinary price, it does not revalue the market for all of his other works, because there's one class of collectors buying the best by every artist, and then there are other collectors who are buying more representative examples, and they're not necessarily associated.
Can we talk a bit about the demographics while we're on that subject? Are they younger as well?
Definitely. Again, as an impressionist and modern specialist by trade, I started in this business 20 years ago and interfaced primarily with people above 60 years old. And that has definitely changed in the course of my career to anywhere down to people in their 20s, but now a much more diverse array of collectors by both region and age.
I think you're also seeing collectors come into the market at a much more elevated level, where historically a collector might have bought an Ed Ruscha print, and then an Ed Ruscha on paper, and then an Ed Ruscha on canvas. Today they're coming in and buying the $15 million example as their first purchase.
Wow.
Again, not uniformly, but we are seeing a real shift in the way people are buying.
And I think that's also about access to education and information. So maybe 20 years ago, if you observed a Monet on someone's wall and felt that you liked it, you may not have felt as easy access to information about the artist and the artist market that would equip you with the confidence to then go acquire one as people do today. And maybe Monet is not even the best example. Maybe it's Matthew Wong or a newer artist where when people like something that they truly don't recognize, the shift or the work between recognition and knowledge or confidence and the ability to buy, to really invest at that point, it's so much quicker than it used to be.
I'm interested that you say invest, and one of the things that Anders mentioned was that this works of art as a store of value, and I want to bring you in here, Damian, because, okay, 1 million plus, that is sort of the minimum for you, but tell us a little bit about what you're seeing.
So I think I agree with Brooke on the age side of things. We're seeing a lot, I think if you go back sort of 20, 30 years ago, people used to always sort of have that knowledge of, I won't buy anything I can't write a check for. Whereas the younger generations and the sort of, especially the hedge fund guys as well and the sort of the private equity market are very much geared around the idea that actually I will look to take leverage to get financial flexibility to stretch myself that little bit further, and they're much more confident to do that. And that may be because we've had sort of 15, 16 years of low interest rates, so everyone's a bit more sort of lackadaisical about it. But at the same time, I think they're much more confident in the way that they approach things. And for us, we saw 2022 was a record year for us. We saw a lot of people trying to gain financial flexibility from their art collections to be able to really take control of disconnects within the financial global markets, where there are unique opportunities to suddenly jump in, buy something at the right price, and whether that was enhancing their own collection, as sort of David was saying, where you're sort of going from the B to the A grade quality works, or you're investing into other equities. You're taking advantage of, the depression, sort of fluctuations in the currency markets, in the sort of equities or commercial real estate, etc. So we've seen a huge shift in that side.
I think that's an important point, because I think the sophistication financially of many of these buyers is they're used to leverage, and they're used to leverage against their houses, their boats, their planes, their equity portfolios, and this is just another asset. And as that value of that asset has grown from 5 million to 200 million, it's just another arrow in the quiver.
Yeah, and we've strategically changed a lot to focus now from smaller loans onto that sort of $25 to $75 million price bracket, where we're getting a lot of people coming in and just sort of trying to seize opportunities.
One of the things when we were discussing this before, another thing is what happens if you inherit a lot of art and you can't resell it quickly, can you?
Yeah, it depends on your geographical location, but I mean ultimately, say UK, Europe, actually to pay inheritance tax or succession tax first, you've got 6 months, you must pay it before you can sell anything. So actually to take finance against it quite often means for people, A, they've inherited something they don't really understand because someone else has collected it and built the collection. So actually to then spend time with, say, Brooke and David and be able to work out what are the correct items to sell, or actually do I want to keep all the art and I want to sell residential property instead? But it buys time and an ability to do that. And we've found, on the other side is actually sometimes it's better to, you collect over 30, 40 years, you're a legacy, you're a connoisseur of the art, you want to leave it for future generations to enjoy, but your younger generation don't really like what you've been collecting and actually will sell it straight away, and therefore you can leverage it, give them funds to do what they like to do, and at the same time leave your collection as a whole, and then it can be passed on to a museum or to the cultural sort of benefit later in life.
Although at Sothebys, if you borrow money from Sothebys, you don't have to sell it.
No, not at all.
I think it's important to say that
yes,
as well.
and I think 90% of our loans are actually what we'd call art equity loans rather than consignor advances. So there's no intention to sell at all. Clearly, if the client wishes to sell, we can always help with that, and we will, sort of guide them. But in reality, 90% of our loans are geared purely towards leverage against the art collection.
But I think with the end of 1031s in the US, it's also led to a lot of people thinking about financing.
Could you just explain, because we have mainly a British audience, they may not know what 1031s are.
Sure, so there was a rule for many years, which was, thanks to Donald Trump, I think eliminated for every asset except for real estate.
Except for real estate.
Except for real estate, but essentially you could have a painting that you bought for $1,000, sell it for $1 million and buy an equal painting and defer the taxes down the road. So what you saw for many years was a pretty fast velocity of trading where someone would come to Brooke, Brooke would sell the painting, they would then have 6 weeks to identify an equal amount and buy. When that ended, all of a sudden you had people who had created collections over the last 15 years that had a $25 million painting with a $100,000 cost basis. So the idea of selling that $25 million painting and getting 12, well, why wouldn't you keep that painting and actually just borrow 12?
Yeah.
So I think that's also in the US been a real accelerator in the increase in loans.
Oh, okay. I'd like to come on to the subject of geographical spread, which is something else that Anders mentioned. What are you seeing? What are you seeing in private sales? Are you seeing more interest from Asia? I mean, Asia is the big thing at the moment, isn't it?
So our stats, yes, we've definitely seen a big increase in Asian buying, but I would say it's more on the auction side, which is probably a third of the trading volume. Historically, the Asian markets have preferred to bid against each other. I think over the last 3 to 4 years, you've seen a greater confidence and understanding in the private markets, but I think we're still in the second and third inning of where that comes. Really, you know, we see a lot more velocity still coming out of the US, which I think is much more transactional.
I agree with you, and I think the auction geography breakdown belies the true art market, where there's a very robust and mature secondary market in the United States and to a secondary or equal or somewhat equal degree Europe that doesn't exist in Asia to the same degree. So when we say that Asia is participating perhaps relatively equally in the auctions, their overall spend is still, I think, much lower and not as mature as America and Europe.
And I think it started in the primary market where you've seen a lot of galleries, including ourselves, in the last 10 years open in Hong Kong and Shanghai and give people a greater comfort. But the secondary is just really starting to happen in the last 4 or 5 years.
I'm interested to continue on about this sort of next generation of buyers, because we did see a little bit of a slowdown in the market at the end of last year, I think, particularly for the younger artists who'd gone over $1 million, which is our subject. Have some dropped back now?
I think that's less generational and more speculative versus classical, and I think what you've seen was in the last 2 years in every asset class, whether it be fine art, watches, wine, cars, you know, kind of an irrational exuberance, and with the increase of rates and uncertainty, you've seen a lot of that drop back to earth and kind of a reversion to, I think you said in your report, old masters, and you know, you have more people who are buying Matthew Wong who are now looking at Picasso and surrealism. So I think it's really been more of a safety trade, in my view.
It's the same thing I guess you see in any asset class, you know, people move to safety, and I think obviously in the art world, reputation, history, culture value, all these things will play into the same thing. I mean, a lot of these young artists are still relatively early days in their career, and as you say, I think there's been a speculative side to it. But it's still, I think it's fascinating to still see, you know, that people are, you know, obviously still going to have a confidence in order to be able to spend $1 million on a young artist. So I think, you know, that there's also a phenomenon there. I don't know, I mean, in terms of the data, in terms of who drives that, I mean, is it again potentially a younger generation behind this, I assume, that is also driving other collectibles to 1 million plus, whether it's sneakers or whether it's other things, which is fascinating.
I'd be interested if you could talk a little bit about guarantees, because there's been quite a big change in the market in the sense that the use of guarantees has sort of securitized sales in a sense. I think perhaps Brooke, you're the best person, or?
Well, I think it's, the auctions are much more effectively managed today than they were 10 years ago. Because of guarantees, we effectively pre-sell many of the lots that we bring to auction. We also have a much clearer vantage on what the interest is in each of the lots going into the auction, because in some cases there may have been guarantee conversations, even if those works are not guaranteed. And it gives us the opportunity to, in conjunction with and dialogue with consigners, manage the sale to the most effective success. So I think you've seen a growth in sell-through rate overall at all of the houses for the largest offering auctions. But I think that warps the perspective of performance and market if you're not really digging into those results, and deters price correction at times where price correction may be warranted, because it's a very actively managed result now.
But I think if you go back to the last market peak in 2007, there was equivalently almost the same amount of guarantees with about 1/10 the number of guarantors. So in similar ways that Damian has seen a big increase with hedge fund, private equity, more sophisticated investors, today we have a guarantee pool which is 100 to 200 people, where 15 years ago was probably 10.
That's fascinating.
Well, I think the guarantee is better understood by the clients and by the audience, and better received now, both
Absolutely.
by sellers and buyers, than it was.
And since our topic is $1 million plus, have you seen any changes there as far as guarantees are concerned, or do they tend to be over that? Almost
if anything,
invariably.
I would flip it. I think guarantees were very much a function of the high end that we're seeing a huge demand for at lower and lower price points.
When you say lower price points, what do you
All the
mean?
way down to 50,000.
Yes.
Really? Really?
Below a million.
Gosh, that's quite something. And Damian, are you at all involved in guarantees?
We are not on the actual sort of organising of them, but we certainly have acquisition finance that we provide people. So quite often we are working with the IBA in many circumstances to support them should the IB land on them, or alternatively we can also be working with the sellers where we're bridging that gap sometimes as well for them. So they've got a guarantee, we can finance the guarantee part for them prior to the sale, so they can have funds in earlier than they would normally have.
So David, one of the things when we were preparing this, one of the things you've told me that there's a bit of a disconnect between expectations and what buyers are prepared to pay. Can you talk a little bit about that?
Sure. Well, I think, if you go back to 2020 and some of the findings that you found, we had a record year in private sales, and I think in moments of great uncertainty, we see an aversion to risk and people not necessarily wanting to put their works up at sale without a guarantee, so they might come to the private. So in 2020, we had our most amount of sales above 20 and above 50 million privately. In 2021, we had 0, and auction had its greatest. So I do think you can really see this working.
Yeah, kind of difficult to predict. Which is the healthiest, do you think, the healthiest range at the moment?
I think we've seen that come down as people have become a little more uncertain, and there's a lot more liquidity, I would say, in the 1 to 5 million range. And if you look at what's happened at auction in the 50 million plus, you've seen much thinner bidding, but of course, there's much fewer people who could afford to spend $200 million on a painting, so it's a bit intuitive.
Yeah.
And I guess to your first question, what's been hard is as the market's been quite bullish, and similar to what you had said before, if a Magritte sells for $100 million, everyone thinks the Magritte is worth $100 million. The buyer thinks they're more sophisticated, so it's hard to close the gap. And I think that's something that I think we will see come to equilibrium this year, where expectations, and we saw it really in the last November season, have become a little more rational on the seller side.
Are you seeing the same thing, Brooke?
Well, I was actually going to say that I think it's also a function of who the buyers are at those different price levels, that part of the attraction of auction has always been transparency and the confidence that it instills in buyers through competition. They like to see their own desires and instincts reinforced, and it encourages buyers to bid further to see that somebody is competing against them. But at the highest end, and I think part of the challenge that we've faced most recently is that those are the most informed and often independently confident buyers who may be just as satisfied or more satisfied to buy something privately for an even higher price than they would pay at auction, and relish the privacy, and don't equally need the competition to engineer their
Yet it's all
confidence or desire.
so interconnected where we could have sold nothing privately had the sales in June of 2020 not happened and been successful at a high level, the markets were stalled. So I do think you need the public affirmation that the markets are okay in order for the private markets to function in a more normal way.
No, they're interrelated.
So Anders has given us this report about the 1 million plus market. You've told us that 1 to 5 is possibly a healthy segment of the market.
I mean, they're all healthy. I just think that there's more buyers at that level,
yes,
and it's people have to think less about that purchase.
Yeah. So how do you see going forward? I mean, I know that nothing is more difficult to predict than the future, but how do you see each of you going forward? What is your feeling about the market for this year?
I guess we're starting with me.
I'm starting with you.
Starting with you.
I've been, I would say, and we were talking about this yesterday, a bit surprised that early on in this year we've actually seen a greater volume in the higher segments in the 10 million plus, where I would have expected more sort of transactional volume in the 500 to 5 million. But I agree with Brooke. I think there is definitely a shift towards quality that continues. I also think we're seeing a shift a continued shift into more classical. And I think that goes all the way back to old masters, into modern, into more classical contemporary. And I think that will continue.
Is that something to do with the fact that we are in a time of economic uncertainty, and history teaches us that generally in times of historic uncertainty there's a bit of a move back towards the tried and trusted, the validated artists who had museum shows and so on? Is that connected?
Absolutely, but I also think the sheer numbers that have happened for artists that we would call wet paint got ahead of themselves in many instances.
But it also validates the value of other artists and other periods. So
you can now buy a Picasso for the same price as you can buy an artist that just had their MFA show. What do you do?
Yeah.
And people are really drawing those comparisons. People are saying, if I can buy this, that was painted this year for $1 million, then why shouldn't I buy this old master painting for $1 million? And what is that relative value?
I think we're also seeing people go back into the secondary markets that were really primary market buyers, because as we've set new records at auction, the galleries have felt they've had to raise their primary pricing, so all of a sudden you can buy a piece secondary for half the price of something primary.
So what happens to those $1 million plus paintings that are from 2022 compared to the old master? I mean, is this a bit of an alarm bell? I mean, are those...
I think the market will continue to seek out new benchmarks, and it's not just for new artists. It's for women artists, something that's well covered here. The market will continue to crave to validate. And to anoint and to assert. Louise Bourgeois is not done, and Frida Kahlo is not done, and Barbara Hepworth's not done, and there's so much parity, for example, to still strive for in that market, but equally new great artists will come along, and people will seek to revalue them within the canon of art history. And that's perfectly natural phenomenon that I think sits alongside, as you make those strides forward, how you then look back and how it casts retrospective value on other things.
And have you given me your predictions for this year?
I haven't. I think that was part of it, that I think that we'll continue to find new benchmarks in some of these categories that are either, women are a good example of something that is a continued prerogative or agenda and focus, I think, for the art market as a result of its priority for humanity. But I also think last year we had a staggering supply on the art market, and part of that was, and at auction specifically, part of that was a reaction or after effect of the reduced supply of the pandemic. So I expect that to achieve a new equilibrium and perhaps be a more concentrated or lower supply volume-wise this year. I expect that. We'll see. And I also expect for collections to continue to be a leading facet and theme of what we see on the market, not only because demographically we have reason to expect that, but also because it's an increasing fascination in the art market. And we didn't get to touch on this, but you mentioned this earlier too. This has become an increasingly important frame of how people learn about, are inspired to collect, and think about collections and value, is learning through the collections of the past, and being inspired by the connections that people have made that they don't think to make, and emulating them. And so I expect that to be a continued, really important vehicle for the art market.
Plus, what Anders mentioned is this change of generations as well with the baby boomers. And have you any predictions?
Yeah, I think I look at it in a slightly different way, but if you think of it is a safe haven, and I think Anders sort of pointed that out before. It is an area that has had consistently since sort of 1950 outperformed most of the other asset classes out there. And that gives a lot of certainty to people, and whether they're buying the old masters or the up-and-coming artists, I think they do look at it very much as it is a safe haven, but also it's a passion, you know, and it's a lot harder to let go of your art collection than it is to let go of your stocks in XYZ company, or you know, your commercial real estate or something like that. So you too tend to find that it's driven by passion, so people want to continue collecting. So I see that on the strength side, and it is a safe haven for against other asset classes, especially in these very volatile global.
There's really no correlation.
No, there's none at all. I mean, I think Mimosas, or Sotheby's Mimosas, did an analysis since 1950 on average, and it depends on the artist, etc. But on average, art has grown by 8.4% compounded rate of return per annum. So I mean, it's really sort of outperformed most areas, and inflation in most cases.
Well, I'm glad, nevertheless, that we talked a little bit about art as a passion as well, and collecting art as a passion, which is nice. I want to thank you, the audience, for being engaged and interested. I want to thank our panellists for giving us a really interesting talk. David, Brooke, Damian, and of course, thank you to Anders for preparing this report.
Thank you. Great.